All right, good morning, everybody. I wanted to show you real quick. We get a lot of talk about the CTA charts, and there's always talk about what they are doing. There's so many vague references to them. If you want to see what big institutional traders are doing, they have to report that, and it comes out every Friday. Now, to be sure, the data is delayed, right? There's a process. They have to turn in all of their material by Tuesday. Then it all gets synthesized and correlated and published on Friday. So obviously there's a bit of a delay, but their positions are so big and it takes them such a long time to unwind and reposition that it doesn't matter that it's delayed, right? Plus, it's just a huge amount of money. When they move their money, markets move. So you want to kind of know what the heck they're doing. If you was just to go to Google and type in COT report, which is what I'm showing here, you get a lot of choices. Bar Charts has it, CME Group has it. One of them that I've used for a long time is this one by tradingstir.com. It's free, it doesn't cost you anything. The government's report is some 1980s looking teletype spreadsheet. It's ugly data, just raw numbers, no graph, no charts, no nothing. It sucks. I mean, it really, really sucks. So you want something that's going to clean that data up and put it into something interactive, some kind of graph or chart or something. And TradingStir does a relatively decent job of that. When you go there, you got a lot of choices. You can see how much is allocated into Bitcoin or the NASDAQ or the ES. You can look at commodities, oil, crude. It's fantastic. So pick your poison. All of these places have some representation of it, and some do a better job than others. I'm sure there's a paid site somewhere that has something really amazing, but you don't need it, right? You can just get the free stuff. This is the one that I like. There's a lot of videos out there on the internet that'll explain what the hell the COT report is and who the different participants are, because, we have to break down who they are, right? Which ones are which, who's recordables and non-recordables, and what the rules are about the recording procedure and process. I'm sure there's plenty of videos out there. If not, just talk to AI. It'll walk you through it. So that's how you can get the COT report, a snapshot once a week, right? Now, one thing that I tend to look at quite often is this one from Mentor Q, where we come in and we look at the CTA position. Just recognize it has that letter Q behind it, right? Because if the COT report comes out once a week, how are they updating their charts every day? Huh? Bueller, Bueller. I don't know, right? Like, they're not going to give us the secret sauce. But this also is just a snapshot, CTA positioning. So we can hypothesize and guess and speculate on what it is that they're doing, and we can listen to what they say on TV and the bobbing heads, but just follow the money. Right now, this is what we've got in the S&P. They got risk off a little bit, right? If you look, all they did is ran it back up to their previous allocation. And the easiest way to understand this chart, the green line is the CTA's position. Think of it as how much of the market are they holding long? That's not the actual real thing that this is, but if you think about it that way, it'll be less confusing. How big is their position? It was this much. And then they reduced their holdings, and now it's this much. And if you think about it from that point of view, it is way less confusing. They de-risked a little bit, just a little, because they got ahead of themselves. And now they're holding out at this level. If we could see further back, we could look at this high in relation to things that are further to the left and have a better understanding of the allocation level. but that was January of 2024. And then this was what, April 2024, all the way into April of 2025, when the president got bent over a barrel by bond traders and then changed his tune and we ran back up. Now we're just holding here. So, you got a lot of analysts out there who put their own spin on things and they say things off the cuff that can be misinterpreted or whatever, but you can just bring up your own chart and look at it and form your own opinion or your own point of view. That doesn't look like we're dumping. It doesn't look like they're selling. They sold off a little bit and they're holding the line. That's what I get out of it. That's a 786 pullback too, by the way, huh? So until we break 786, I don't see any reason for us to go to the half. This could be the Adam Grimes pre-consolidation breakout for another leg higher. And then we would be putting in a 1, 2, 3, 6 and a 111 up here to see where the next pause point would be. We got more clarity on the potential to end the shutdown. Sounds good. We still have to get it through the House. And, don't count your chickens before they hatch, I guess, right? Because it'll only take one person to screw it up. And even if they do get it through, it's only going to get us by until December and January. It's not like, we're going to get things all the way down the road. So we're going to be doing this whole thing all over again right into Christmas and into the new year. Maybe if we have time, we're going to take a look at NVIDIA when we're done. There's been an announcement that there was a firm that sold all of their NVIDIA. Well, they didn't do that all at once. They've been doing it. And now that they're done with it, they've announced it. But that would explain why NVIDIA had that collar or that range on it. And it seemed like we couldn't get anywhere. It didn't really sell off that hard, but it just couldn't get up into a new leg. And that selling is done. So we got the NASDAQ down 0.5%, the S&P only down 0.25%, then the small caps, and then the Dow basically flat, but winking at the green side. Hong Kong, China, Europe. It's a pretty divergent market out there. And even with Europe's positive open, we're still kind of fading out of it. So unlike yesterday, where we were looking at Europe as a possible end to whatever juice we was getting, it's a little different today because they got the juice and we don't, or we didn't. Look to see if we play any catch up through the morning. They're not pushing us down, but they're not helping us up or lifting us up either. Could look for a capital rotation though. Money moves. So as Europe closes, maybe that sentiment comes in and helps us out a little bit. All right, it is a holiday. I had a lot of people asking if we were closed today. Yeah, if you trade bonds, we're closed today. But for the rest of us, it's open. We're good to go. The markets are going to be a little weird without the bonds. If you don't trade bonds, I get it. It's not my first choice, but days like this is where you'll realize how bonds provide a little bit of structure, some stability to the market. And so things like, oh, I don't know, HYG, for an example, may not behave the way that they normally behave. They probably won't be that bad, but just watch for nuanced little differences and be mindful that not everything is open today. It looks like by the time we get into lunch, we're going to be done, right? We won't have any economic shenanigans into the afternoon. So whatever we get through the morning session should be whatever we're going to get, and then we just run it from there. We're getting a 310 cross. It's a little noisy on the intraday, so we'll just look at it out here on the daily for a moment. You can see the white line coming back up into the blue line. That's the 310 cross that we're talking about. Now, for that to happen, price has to be above both of them to drag that 3 up through the 10, kicking and screaming. The higher we get above the 10, the faster that 3 will come up through the 10. We didn't get our single shot TRB, unfortunately, but we did get a nice start to perhaps a scoop pattern. The concern that I have at the moment is that we could build some ugly little base down here, right? What we're eventually looking for is for price to get back to the top. That's pretty obvious. We want to get it back up here. The problem is, now that we've paused, this could be a range and we could just sit in it for a while before we finally make our way back up here. Kind of like how we topped out here and we built this range before we finally got back up there. It's going to be really nice if we can just get this more like a V shape and we get right back up again, but I don't think we're going to get it. Today with this red candle, today's not done. I know that's a pretty obvious statement, but since it's not done, we don't know if we've topped out and we're going to come down or if we're going to go higher from here. We've got this question that needs to be answered. Are we going to end up with a lower high? If the market low is in for the day and we just stay in this tiny little range, which would be difficult to do, but technically we could do it, then this won't be a lower high. We would need to see what the next candle does. And if we go up, then we won't count this. Only if we fall down and leave this behind would we look back and say, oh yeah, that's a lower high. So at the moment, we still don't have an answer to what this is. With structure underneath this, 6,800 really needs to hold. That's just underneath the 20 period daily moving average. It doesn't matter that it's underneath the 20 because the 20 is just a visual to kind of help us out. We're not using moving averages for any sort of trade logic, right? They just provide some insight. So we can cut through the 20, no problem, just like we cut through the 10 and the 3. We don't expect price to bounce on it or anything like that. It's not a real line, right? But 6,800, that's a real line. We need to keep above 6,800. If we get underneath it, we got 6,792 as a last line of defense. And then it's game on to the downside and get that gap closed, because that gap still needs to be closed. Otherwise, holding above 6,800 means that we got the opportunity to continue to run up. So we don't know yet. It still needs to play out. Until we start breaking key levels, though, I don't see this as bearish. It doesn't have anything bearish for us, right? You got the midpoint of yesterday, and we're above it. You got the midpoint of this whole run, and we're above that. And then you got the midpoint of that whole run, and we're above that. As long as we're on the top end of all of those 50s that we just marked out, I'm not bearish. Not bearish doesn't necessarily mean bullish. But I don't see anything bearish in this. If you want to get ahead of the crowd, shorting while we're going up is preferred for me rather than shorting from the hole. I really hate shorting from the hole. I don't like buying into new pushes to the upside. I don't like selling into the hole. So if you wanted to go short, this would be the time to do it while we're still pushing up. Not literally right now because we're red, but yesterday afternoon, for an example, or if we rally today back into that line, shorting while we're going up is what I like to do. We're not necessarily talking ES at this point, right? Just trading mechanics. So that pretty much lays out the situation here. Is it going to be a V? Is it going to be a cup? Will we set a lower high? All to be determined. And why a lot of analysts don't have an answer to what are we doing next and are we bullish or bearish? Until we know what this is, we don't know what the bigger pattern will be. So you got to bring in all the other stuff. Overnight volume at 62, that's more along the normal line compared to those 90s and 100s that we've been seeing. So I like it in the mid 60s. It just means it's another day, nothing surprising or spectacular. It's not really light, which would indicate they're scared of something, and it's not really heavy, which would indicate that they're acting on something. It's just another day in the park. We're above all the levels that matter. Volatility trigger, 0 gamma, put wall. We got an options level overhead at 75. And we're above all the moving averages. So we got nothing. Now we're down 0.25%, which means we're closer to this lower line than we are the upper line. And it's easier to hit the lower line because the lower line is inside of yesterday's trading range. So we don't even need a breakout to get there. That makes it easier to hit. Base case scenario is that we go ahead and come on down and we hit that level. Now there's a lot of work that was put in right through this zone, and we wiped it out on that drive to the upside, which was a really nice move. But I've seen that setup before, so keep your eye on that level, right? If we get through it, mark your proximal and distal lines down here, because this should be a really good play. That's where we're headed. We'll cut right through that 6811 cog, 6800, 6792 cog, which was yesterday's low. We'll come right into that zone. So all we got to do is get through 68.32 cog line. If we get a breakout today to the upside, then we've got the round number 6,900 and an overshoot into 69.42, which is an old cog line that we don't use anymore. But 42 should always be on your radar, especially if you're trading the NASDAQ. But for the ES 42s, we don't use them, but we used to. And overshoot the 42 into the big round number 69.50. But I look at that number in today's action and kind of wonder what's going to be the push to get us there, because we don't really have any economic schedule today. Nothing that should provide that sort of drama. Maybe the lack of that drama is all the excuse we need, huh? Today's floor pivot is higher than yesterday. That's bullish. Price opened above it. That's also bullish. We're still above the weekly pivot, obviously. And we have a missed daily pivot so far. It really looks like it wants to get there, though. We're really close to it, and it's a cog line, 68.32. So another reason for us to expect that we're going to hit it. Also, another reason to suspect that if we get below it, we're going to yesterday's RTH low, at least. That line in the sand needs to hold. Due to the size of yesterday's moves, we've started to see a compression. The range today on the S&R lines are narrower than they were yesterday, closer together. But it's still projecting an upside move, not as heavily as yesterday, but not bad. You can see the upside is much farther away. Just remember that those S&R lines and floor pivots does not move price, right? It's not going to make price do anything. If we can hold the floor pivot, look to recheck yesterday's high or Globex high and then see what we can get out of it from there. I keep looking at this low with the S1 and thinking I don't have a reason to suspect a breakdown, and I don't have a reason to suspect a breakout. You know what I mean? Like, we don't have anything today, bearish or bullish. We don't have any reason to expect anything out of the market. We get some headlines in somewhere, that could do it. Like the perspective on NVIDIA. I'm sure I'm not the only one who heard that announcement and thought, yeah, the selling is done, huh? Well, all right. Get a new leg up in NVIDIA, that'd take the market up. All right, this week's distribution is as ugly as last week's at this point. Market got hit with the ugly stick. So the point of control for the last 2 weeks, they're kind of overlapping each other. That high volume node basically extends into this week's trading. It is the lower half of our range, right? This value area. So if we break our own point of control, then we've got the last line of defense, the 67.92 cog line. Don't forget, we got that gap down here. So if we break the 92 cog line, we're going to this gap close. It's a 30-point run. I think it'd be a nice trade. I'm not interested in getting the full 30 points, right? But if you got a destination, then you can just keep hopping in and getting a little bit along the way, right? And for those of you with diamond hands and you just don't care, then sure, hop in and ride it all the way down. I don't need a 50-point run with one contract. I'd rather get a 5-point run with 10 contracts. Which one do you think happens more often, a 5-point move or a 50-point move? Which one's easier to anticipate? 10-day, 30-minute volume profile and TPO. We still got that point of control overhead, and the candles that made it are not going to move anytime soon. This is the structure that made that point of control, and we've got to get through Tuesday, Wednesday, and get into Thursday before we start to wipe these candles out. So if this point of control is going to move, we have to build out a new level. We have a spot way up here, but that's going to get wiped out before we even get to those. So we won't be moving up. We've got a level down here, and that's possible, especially since we're putting new candles in along that level. So 68.75 area doesn't look bad. Otherwise, it's more likely that we're going to get the point of control down here in that 68.11 area. And I think the TPO really shines on that one, right? You can see that elevated structure right there. That's very likely where the new point of control is going to be. I'd really like to be above it when it gets there. So the idea of price holding above that 6,800 still holds. This, with a little more granularity, says let's keep it above the cog line at 68.11. All right, we took out that VPOC from 11.5, so we're done with that. We've still got 84 overhead. No new VPOC from yesterday because we've cut through that level. In fact, we were hanging out there for most of the night, put in a lot of work. Now we've got a little bit of a disagreement between the TPO and the volume profile. I'd expect this point of control to move down and get caught up with us. And this is the structure that we're hanging out in. I know it shows that it's over our head here, like a little bit of resistance, but I would treat this whole thing as the entire range. That's what you want to get out of. So if we can get out of the top side of that, then we can run up and try to test this previous resistance zone. Otherwise, if we break down from here, then we're headed to this cluster at the cog line and then yesterday's low. Well, the other cog line and then the low. So 32.11, roundy 92. Simple, sweet, very easy. The market has given us a gift today. Nice, clean levels. Everything's lining up with the markers. It's about as good as you can ask for on a day where we don't have anything steering us in a particular direction. We almost made it to the weekly expected move yesterday. Close, but not close enough. We're supposed to close on Friday within this range. But that doesn't mean we can't escape the range and then come back into it early. We'll see what we get out of it, but so far the market's doing exactly what it's supposed to do, and it's worth considering the move that we got yesterday. That this range is supposed to be the movement for the entire week. And we made the move, almost the whole move, in a single day. Which kind of gets us to thinking maybe we moved too fast yesterday or we moved too far yesterday. Looking at the weekly, we're not overbought. We're not overextended. We haven't moved too far too fast, and it doesn't owe us any pullback. But that's the weekly. We're still getting these lower highs, just kind of working our way back down. On the daily, this is very clearly showing we're not overextended. That big move yesterday was not enough to cause any sort of mean reversion or least squared methods. That's it. That's the purpose of this indicator, and it does a really good job. We're not overbought. We're not overextended. All right, looking at what's down today. Mag 7 chips through SMH. Bitcoin, nat gas, more Bitcoin, uranium, and Mag 7 up volume is down. If we want to see the market turn and rally today, it's either going to come from 0-day flows, which we wouldn't see right now, from breadth like Mag 7 chips, financials, consumer discretionary, and we don't have that now. Bonds and commodities, but bonds are closed. Commodity news is tomorrow. So if we're going to get a rally today, we're going to get that rally after we get into the open and we get something. One of the somethings that we could get is that the Mag 7 and financials and consumer discretionary turn from being at the lows and try to run up and break through yesterday's close and move to the upside. That'll be really easy to see, right? We'll be able to spot that, no problem. Or it could be 0-day flows. And if you got the right tool, that won't be hard to spot. Spot Gamma, Trady Ticks, Mentor Q, whatever you run, right? They're all going to provide some form of, hey, the options are moving kind of logic. Maybe Japan, right? Because that one, I mean, the moves that we saw in US dollar Japan last week were wild. So, you could use that pair group and see if we get anything out of that today. But without specific economic events on the calendar, it's got to be one of those if we're going to get a move. Looking at what's up today, gold miners and Mag 7 down volume and the VIX. All right, well, whatever. It says it's up, but I mean that doesn't look like much to me, right? All right, this will be nice and easy. GTFO, like we always do, you got to get out of the box, right? Get out of the box. We can do something else. So with that in mind, just measure the whole thing. Look for the start of the move to the downside. Break out, get into the 6832 cog line, which is 1236. That'll be the next place we get an opposite candle color. Move the lines, move the levels, and run it on down. Otherwise, just use the box. If we break out of the box, target the midpoint, 6830. Get out of that. Then you got 6811, 6,800, 67.92. That gets you to the bottom of the range. Then yesterday's low. Then the gap close. Level by level by level. Don't really need that one up there. So nice. It's not perfectly evenly spaced, but it's good enough. Run it all the way down. Otherwise, look to get through the midpoint from the overnight, get back to the top of the range, and then we look for a breakout on the day. The midpoint just above 68.50. And remember, we got 100 points to go from 68.50 to 69.50. So if we can get that breakout, then we can get started on getting some of those 100 points. I'm not looking for the whole 100 points in a single day, but that's the upside goal if we can keep this rally that we started on this reversal here. We got a good start. We just need to keep it. The concern is, what if this is just a pullback before a deeper correction? Right? I didn't really touch on that too much, but if this is just a pullback before going lower, that's the concern, right? It could be something like a dead cat bounce sort of behavior. So we really need to see how this resolves. That's what I got for you guys. Be careful, be safe, keep your eye on the headlines, because it's going to be gotcha headlines if we get anything today. Otherwise, it's all going to be market focused. 0-day options, market breadth, not really bonds, but commodities. Smaller categories to choose from, but that's it. Be careful, be safe. I'll see y'all tomorrow.